Hey, what's up, guys? Hope you all are doing good. I'm doing well. In this video, we will talk about TappAlpha's only fund, TSPY. We'll look into the price action. We will also look at the NAV that they have. We will also look at the expense ratio as well as the distribution that they have. And we will compare these all with other funds, mostly the covered calls ETFs that are out there. And I'll show you the end result of if you were holding TSPY in comparison with other ETFs. So if you're interested in this video, make sure to hit the like and subscribe because I cover different topics on the same niche. And I also show you my portfolio, which is now at $201,000. If you're interested, let's jump right into this video. So TappAlpha is a company started recently. They have announced their fund and was listed as an ETF on the stock exchange at the time of August 15th, 2024. So it's not even been more than 8 months that this fund has released. And TappAlpha overall, the company has only listed one ETF or one fund in this case, which is TSPY. They can do the same for index ETF like QQQ. So if they do the same thing with Nasdaq 100 index ETF, they can use that as another fund as well. So this is based off of Spider S&P 500 SPY ETF. And what they do is they sell out of the money call options. So they do capture some of the upside for price appreciation, and they pay high income dividends, in which you can see here as the distribution rate of 14.10%. Current price $25.66, up 1.22% for the day. So what's big about TSPY? Basically, it's a way of generating passive income along with some of the price appreciation that some covered calls options funds provide. What they do is they sell out of the money zero DTE options, basically selling covered calls on the index ETF SPY while holding it. Basically, that keeps them grow with time. But how far do they sell the option or covered calls for is dependent on their portfolio managers. Basically, what they say is they have some custom proprietary software which is built from their funds, TSPY, and that is what the background of their CEO is, who is here. You can see Sai Katara is their CEO, who basically manages or created this fund based on his experience selling options when he had his baby on the way, and he realized that you can generate good passive income selling covered, and that was the idea behind the inception of TSPY. So it does provide some growth, but at the same time, it is an income oriented covered call ETF. And then maximize time decay. Basically, it's a decay in Greek terms while selling options. If you're selling option, you time is on your side, so that's why this reduced risk. Time risk is because selling covered in a down market, like when the market is going down, you sell a covered which is above the current price, you would make money. And if you don't, then you can lose money when the underlying ETF or SPY loses money. When it goes down in value, you would still be making money with TSPY comparatively to SPY, which will be going down for that day. So with TTE, they are flexible as well, and that is what they have shown in their recent times. At a glance, number of holdings, again, four mainly they are holding PY, and what they do is they have their distribution dates already available. The good thing that I like about TappAlpha TSPY is that they've been generating income, but at the same time, they've been providing investors with consistent income. This is something that is lacking with XDTE, with the other ISPY, and with the SPYI, all these different ETFs, because the distribution that most of these ETFs give are all fluctuating up and down on monthly or weekly basis. But TSPY has done some good work there, that they have been giving consistent income. So 29 cents for the past 5-6 months, although 1 month was 27 cents. Again, considering they have been selling covered call options, they must have good allocation of the money where they want to spend their time on. Then looking at the holdings, as I said, SPY is the index ETF that they hold, and 100% of the funds are in that. With the current price, they have over 29,772 contracts, which are worth $18.1 million in net asset value, or NAV. Now let's look at the comparison of different covered call ETFs on S&P 500 index. If you compare price comparison for the return, so I selected the date since TSPY is fairly new among all of these covered call index ETFs. That's why I selected August 15th, is when all of these covered call ETFs had the data first available. So since then, all of them, so we started all of these with 0% return, and to this date, SPY, which is Spider of S&P 500 index ETF, has been up over 10.24% in the price return, and XDTE is the lowest with negative 3.5% return for this period of time since August 15th, 2024. But if we look at the price return, the picture is totally different. You see here that the price return of XYLD, or the total return for with XYLD, is the best. It has returned over 12.14%. TSPY, on the other hand, is at the second position with 11.22%. Basically, if you have been reinvesting your dividends of TSPY that you collect, or the distribution they call it, those distribution, if they were reinvested, if they get reinvested, you are beating the index SPY, which is a big deal. Not a lot of ETFs out there have been able to do so. XDTE has been up and down of the index, but it has consistently been on par pretty much. The problem with this is that you have to pay the high expense ratio of these ETFs. So in case of TSPY, although you have made 11.22% return of total reinvested with the drip on, which is dividend reinvestment program, if you have that on, you are in reinvesting all the dividends that you're getting. That has gained you more than if you were just holding SPY. But the problem here is the expense ratio, 0.68%, meaning $68 per $10,000 a year that you have to pay to TappAlpha company. And what it does is, it over time it accumulates and it eats up into your profits. Again, like if you have a big portfolio of hundreds of $1,000s, then it's better off to hold the index itself. So this is how the overall comparison looks like over the past 8 months or so that TSPY has been around. It's a great ETF. So what is my last verdict on this? If I were to have this index ETF in my portfolio, I would be really lazy, or I don't know how to sell covered calls. Only in these two scenarios I would be holding this equity. What I would rather do is, if you see here, I've been building SPY position in my portfolio. If you have this kind of money and you have, $200,000 invested, or over time you think you can invest this much money, then it's better off to hold the index ETF itself. and then sell covered calls by yourself. This is exactly what I'm doing with QQQ as well. I have bought 100 shares, and then all the shares that you see more than 100, on top of the 100 shares that I bought, I'm selling covered calls, and whatever the money that I get from those covered calls, I'm reinvesting and buying more of the same ETF that I got, that I sold the covered call off. So once my SPY hits 100 shares, I will start selling covered call on SPY. And that's exactly what TSPY is doing. But in case you don't have that time or understanding on how to sell covered calls on index ETF, or even you don't have money first buying 100 shares and then selling 100 shares of SPY, because it'll take you close to $61,000 to own 100 shares of SPY. So if you don't have that kind of money, you can go ahead and buy TSPY, which is hovering around $24-25, and that's something that you can always use to cover your expenses and income, since they are one of the very few companies who provide consistent distributions, and that is probably the key to investment and income generation. If you have a consistent income flow, then you know when and how much money will you be making next time that you see your bank account. So that's about it. Thank you guys for watching. I hope you guys will like this video. If you haven't already subscribed, I would request you to do so, and I'll see you guys in my next video. Leave me a comment if you want me to do another comparison, or you want me to focus on any other ETF that is on your radar, and I'll get back to you with the video. Thank you guys for watching, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.